Okay, so we're going to get started today. Welcome. Sorry about the mishap there. But everybody's out. Hopefully you're enjoying your Saturday. I'll try to keep this brief, answer some questions as we go throughout. Feel free to ask questions. I'll take time to answer them, and try not to rush too quickly through it. But I want to give you some information. Let me go through a quick disclaimer we have to go through. So I am going to show you today a student case study from last year. One of our students had taken an account of $2,100, about $33,000, just trading directional options. So he had a little bit of experience in the past. He was a CPA. He did take a few different classes, but his case study. We have some more case studies, a little more dramatic, but this is something I think is realistic. It's something that took 12 months. It's something that was passively done. And it wasn't done with a lot of capital. Now, is it a one-off? Maybe. Some students start with more money. I suggest you starting with more. It's tough to do with 2,000, but this is a case study I wanted to discuss. So let's get started after the disclaimer. The webinar today is 2K to 33K in 12 months. I'll give you some information. Our website is landsharkeducation.com. Like Renee said, we have offices in Newport Beach, California. The home office is in Scottsdale, Arizona, where I'm at now. We have an office in Houston, and then in Vancouver, Canada. If we have any Canadians in here, we just opened an office in Canada this summer. So our phone number is 855-800-1875. The office is open Monday through Friday. If you have questions, our Twitter is Shark Education. If you want to follow us on Twitter, you can follow us there as well. And I'll put the information in the chat box for you so you can follow us there. So let's get started this afternoon. This is actually our office here in Scottsdale. Pretty warm, sunny today. So I'm thankful not to be in our Vancouver office because it's a little cold there and I know the guys are freezing. So let's go over briefly. I'll give you a brief bio of the company. That's me in the far left. I'm the founder instructor. Ophir is our director in Vancouver. He's also handling our courses in Hebrew that we're putting in Israel. He teaches options. He used to be an options instructor at the School of Management in Israel. David Walker is our futures instructor, so he teaches futures. Phil Naftalin's our education counselor. So Phil Naftalin used to run SOS trading and block trading back in the kind of the early day trading days when day trading was super popular in the late 1999-2000. So the entire company is filled with ex-traders or people that have been in finance. We kind of started this. So I'll give you a quick bio of myself, then we'll jump in. So I actually started, I'm 31 right now. I started kind of early in the world of finance. In undergrad, I had a position at Charles Schwab. Was one of the youngest hires at the firm, so I was working there and going to school. The market collapse happened, took some years off because it was tough to get a job on Wall Street, as everybody remembers. There wasn't really too much. So I ended up moving to become a trader at a commodity firm. I found a firm in Scottsdale, Arizona that took me on, really small firm. I was trained there to trade futures. So my start of investing in markets came at kind of a professional level. So I didn't have, the learning curve that a lot of retail traders have, or a lot of people maybe attending today have when trying to figure out how do I put money to work in my portfolio, whether it's real estate, stocks, Forex, commodities, futures, whatever it is. I kind of had the hands-on experience. So I left LA, worked for a family office as a portfolio manager there, came back, worked on an FX desk in Arizona, and then while I was still running the company, I had an opportunity to be a PM for a really small hedge fund in Scottsdale. So I ran a long-short equities book for the firm, and we've kind of built the company. So we do trade a few different things to the company. I'm not the only instructor. We just hired an instructor who came over from Online Trading Academy. He's our options instructor now. So we have multiple instructors. They all teach under the premise of the Landshark methods. So it's a universal method of trading the markets, whether it's options, stocks, futures. We trade everything and anything. But today we're specifically going to discuss how to use options and a case study in your portfolio to passively invest in the markets. So this particular roadmap, this was done by a student, Ryan. He's in Lexington, Kentucky. Like I said, he had a little bit of experience before. He was a CPA. he had basically just traded stocks, buy and hold, try to figure out the market. Actually did a lot of due diligence on us. He actually flew out to Arizona, came and was kind of seeing the office. He didn't come in, but he wanted to see that we were for real, right? He wanted to see before he signed up that this was a real operation, and then signed up. So he started, and his kind of trajectory is a little interesting because most people that we try to teach or that go through our programs, whether it's on-demand education or our live coaching online, he started to trade live within about 30 days. Most people it takes about 90 days. That's kind of the suggestion. And again, it's different for each person depending on your experience in the markets. So February 1 he had started, and through December of last year, he ended up with a 33,000 plus in P&L. So pretty amazing to see this. And in fact, I'll tell you this, you may or may not believe it, but we have it on our site. This isn't the most craziest story of last year, right? We had a student in Brexit make $120,000 in 20 days, literally just trading options. So we've had some crazy stories, but I start with this one because of the way that he did this, right? How many of you, if you want to give me a one, how many of you have traded options before? If you haven't traded options, give me a two. I'm just curious to see what the background of everybody is in here. Okay, so one. Okay, so a few ones, a couple twos. Okay, got a few coming in. Nice. Okay, so it's a little bit of a mix here. A little bit afraid of them. Yeah, and I'll talk about it, right? And I'm going to talk about some positives, some negatives, and try to give you an overview of this kind of stuff. So yeah, it looks like some of you have, some of you have. Kind of a 50-50 mix in the room. So when he'd come to us, and I want to explain this because we try to do a preliminary Q&A session with everybody that goes through our programs. So one of the reasons, in my personal opinion, this is subjective across the board, as you hear panelists today discuss, one of the reasons people tend to fail in stock markets or investing is because they take the capital they have and they're using the wrong products to meet their goals. Right? If you're trading with a $5,000 or $6,000 account, it's very, very tough to day trade stocks or to go and effectively day trade futures. It's tough. It's tough to navigate with small amounts of money. Right? If you're trading with 50, 60, 70,000, selling options premium, selling credit spreads, put spreads, diagonals, and actually making any substantial money. When I say substantial, I'm not talking $50 a trade or $100. I'm talking substantial capital. You need a lot of money to sell premium in the market. It's very, very tough to make any significant cash without the capital, right? So when he came to us, he said, look, I have 100,000 and change tied up in an IPO position. He had bought Visa on the IPO. The guy was crushing it. And he goes, look, I don't want to cash out this $100,000 now because of the tax. I'm going to hold it. I think Visa's going higher, but literally just now, I think of 2017 cashed out some of it. He goes, I want to put a little bit in this to test to see if this fits my personality, right? So I go, look, let's test options, and this is a viable strategy. So I'm going to give you the breakdown of how we did this, and I'm going to show you the walkthrough on this. So they only used calls and puts. That's it, right? There was no spreads, no butterflies, nothing that's that confusing, right? And I know this because I've been in the industry when I was young, and I remember hearing all these kind of names, and it just didn't make any sense to me, right? Number two, I think that's the second reason a lot of people who want to trade have issues, because it's just too much information overflow. It's too much strategy, not enough application. So this is his P&L, and if I could, I might be able to pull over some of his trades here today, and I'll show you a live account, all of his trades here. And he did a full video on our YouTube, by the way. He showed his TD Ameritrade account. He'll show you the starting date, and I mean, it's all there for you to see. He's super transparent about it. So this is his P&L through the year, and one of the things I want to note with you is notice the P&L curve. It's a slow and steady curve. right? And I could have took the opportunity today from a marketing standpoint and said to you guys, hey, look, let me show you this example of our student that made $120,000 in 20 days, right? But some of the risk he took is not something that I will willingly promote to you, right? What Ryan did was slow and steady, small amounts of money, and it took him a year to do. This is realistic, right? I believe in this because it's not some, fairy tale idea. This is something that's possible, and he followed a blueprint that he took through one of our courses called Remora Options Trading. Yes, this is the Wealth Masterminds webinar. And guys, feel free to ask questions throughout this, right? I want this to be interactive. I don't want to hold it to the end. If you have questions, type it, I'll see it, I'll take the pause and I'll answer them for you. So what are the stats for this, right? I told you what he started with. Let's talk about it. So he took a total of 257 trades, or 21 trades per month. That's it, right? He had a 70% win ratio. In fact, that's a little high. For options, you can actually be less. I know that sounds crazy. You don't need to be crazy high win ratio with options. It's not necessary, right? And I'll explain to you why in a second. His average gain was only $232, and that's it, right? He wasn't making some home run trade and going out to a dinner and celebrating and tweeting about it. There were just small wins over and over and over and over. Very passive. He was trading options and calls only. That's it. Simply, he'd buy options or buy calls, and that's it. Nothing else. No stocks, no forex, no futures, no commodities. He now trades futures, but what he did is he slowly eased into building an account and testing the world of trading before he said, hey, look, I actually like this, and I understand price action. Let me go and test this. So his largest gain came from Netflix trade. It was $2,389. Okay, and we get this question a lot. Well, how much money did you have to risk to get that? Not a single trade taken in any one of these trades throughout the 12 months had more than $500 of capital on the trade. That's it. Right? We have a very specific way of investing in the market with our Remora strategy. Right? The most you can lose. So somebody, I think it was, who said that they were a little worried about, kind of afraid of it. Darius said it, right? So if you were concerned about it, that's a big concern, right? You put money into the market, you could lose it all. You need to mitigate the risk. You mitigate the risk by this. The max I'm going to put out is 500 or 250. Right? So when you walk away from the computer to go to bed, if you can say that's the max I can lose, that's it. There is no more risk. Right? This is why I personally love options. Right? I also trade futures, but that's a different discussion. His largest loss was about $500. That's it. So he didn't have a trade where he'd make $2,000 on Netflix, lose $15,000, come back and forth, right? Going to his equity curve, let me go to it here briefly. Right, his equity curve is steady. It wasn't like straight up, massive loss, now I'm depressed, I quit trading, I don't like this anymore. Right, it was a slow and steady curve. Right, and that's how it should be in the world of trading. You shouldn't have these roller coaster rides if you're doing it correctly. And so let me talk about some traditional income strategies, right? And I hear a lot of people, and I'm not knocking this at all, right? I think if you have a large account, I think if you're somebody who's trading with $250,000, $500,000, if you're a retirement account, and you have that kind of capital and you don't want to risk a lot, I love selling options in the market. Right, but not everybody has the luxury of having $250,000 or $500,000 to invest in the markets. Right, so I see this strategy talked about a lot, and this is one of the issues when you go to these workshops at hotels or you come to these webinars, and people talk to you about a program. It doesn't necessarily fit you, the individual, because it doesn't fit your goals. Right, so you have to look at yourself and say, how much am I starting with? How much do I want to make? Right, how much time do I have before making that decision to do this? Right, and one of the things we see a lot of is covered calls. Right, I don't really like that strategy. Second strategy you see a lot of advisors talk about is dividend-based stocks. Right, as professional traders, I've traded on the professional side at the highest of levels, legitimately the highest levels of the markets. It's very, very rarely we would use dividend stocks to trade with. Right? We use futures, options, and selling premium to bring a lot of capital in. Right? The fourth is buy and hold. Right? That's something we don't do too much of because, again, we're trying to invest passively and take short-term trades in the market that last, for futures, 1 to 5 minutes, for options, 1 to 5 days, sometimes 1 month. So there is a little bit of a problem with these strategies, right? And the main problem is this. It's too much capital for too little gain. Right? Covered calls. Does anybody know what covered calls are, this strategy? It's where, let's say you own Apple and you'll sell calls against it and you take in rent on it. Right? The problem is you have to sell a lot of those call options to make any substantial money. Right? Dividend stocks. I love the idea of it. It makes sense to me. But unless you have a lot of cash in those dividend stocks, what point does it make to own them if you're not going to get the money out of them, right? Number 3, I see this a lot. Iron condors. You need a lot of capital out there to make a lot of money to come back. I see the same thing with premium selling. Right? People will, I sold a put spread or a call spread, and I ask them, how much have you made? I've asked this. We have live workshops in Scottsdale, Vancouver. We have them online too. People come in. And a lot of people, the past 2 years, I've seen this kind of trend in the options market. Oh, I sell premium. And I go, number 1 question I ask, I go, how much is your average gain? They go, about $150, $100 a trade, depends. And I go, so you're telling me you put out $500, $600, sometimes $1,000 of risk to make $100, right? And it blows me away. If your goal is to make $100, and I'm not knocking that. That's something you're like, hey, look, this is perfect. I can make $100 a day. I could trade 4 or 5 days a week, and just slowly build an account. Trade futures, right? Trade futures. That's a great product for that, right? But let's talk about the strategy he used in some more detail. So everything he did was pretty much part-time. How many of you trade right now? If you want to give me a 1, let me know if you trade. You trade. If you don't trade, give me a 2. And I'll talk about kind of what he did with this kind of his trading. So you really need about 15 to 20 trades per month. You don't need too much, right? And let me stress this to you to take you away from the world that I see it in. So we've got a few, some 1s, some 2s. Not 11. I was gonna say, what's the 11? What do we? Part-time, off-time, yeah. So you don't need to trade every day. You don't need to trade all the time. It's just not necessary. And I want to get you away from this myth, right? There is this myth that's taught to us that we have to be at our computers all the time, right? Is 15 to 20 trades a month a lot? It is. I agree with you. It's a lot of trades, right? But these are small positions, right? With very, very calculated risk. So the average risk capital we use in Remora options, the philosophy of this is $500 max. But that's it. If you have a $2,000 account, you need to cut that into 50% because that's too much. 4 trades in a row, you're done, you're blowing your account. You're going to call me, you're going to call the office, you hate me. I'm going to get emails from you, and it's never going to work. Right, if you're trading a $5,000 or $10,000 account, this risk works. You'd have to lose 5, 6, 7, 8, 9, 10 times in a row. Right, if that's you, I mean, it's probably not, but you're just unlucky. It's very, very rare that happens. Right, we try to target about $400, $800 a trade. Obviously, sometimes it's less. Right, we try to keep it very, very small wins with a little bit of capital. So small lot trading, the same stocks. This is the second portion of how he did this. This is super important, and I'm going to give this to you and just talk to you about this. 2 to 3 lots per trade. That's it. He traded the same 20 to 30 stocks. No more. That's it. You don't have to go out and buy a stock scanner. You don't have to go buy some tool to tell you this stock is a hot stock, it's a bad stock, it's a red light, it's a green light, it's a yellow light. You've seen all this, I'm sure. You don't need that. He traded the same stocks over and over and over. And there was a common theme every one of these stocks held. Right? In fact, this program that he took followed one of my trading methods in Remora options. Right? I took a trading down 50,000 to 300 and some change in 2 years' time. He was one of the, he's a few students that have done this to that extent. He really took it to heart and didn't risk a lot of capital and just stuck to the rules. So let's go and talk about the picking the right stocks. This is one of the titles for the webinar. This concept of every day you need a new stock watch list, and I see it all the time with educators in the marketplace since I came into this industry. Sign up for a news alert every day. You get 10 to 15 stocks to watch. So every day you're kind of focused on it. It's kind of a rush mentality to trade some new hot stock. I have personally traded the same 10 stocks for the last 6 years over and over. That's it. I haven't looked at another single stock, and I'll explain to you why. Number 2, they have to be high beta stocks. And I'll explain what that means as well. Number 3, and most important out of all of this, they have to be institutionally held stocks. Does anybody remember the stock Dry Ships? It's the ticker symbol was this here. CNBC was talking about it. DRYS. Remember what was the other one? Last year it was KBIO. This was a huge one for the day traders in the group. You remember these stocks hopefully. Right, Dry Ships went to like $120 a share. Right, there's no institutional holders of those companies at all. Right, the institutional holding on Dry Ships was so small. Institutional holding on a stock like Chipotle or a stock like CMG, CMG Priceline, there's a lot of institutions that hold these stocks. Why does that matter? Why should you care about this? The reason it matters is because these institutions drive the flow of why stocks get sold and why stocks get bought. Right? Nobody here, and the presenters, myself, even with the large portfolios I've managed, we're not going to move stocks, or we're not going to affect a market moving. It isn't going to happen. Right? You need tens and tens of millions of dollars to affect a change in the stock price. Right? Institutions like mutual funds and pensions, right? When they readjust a portfolio, or when they sell out of a stock, think Valiant Pharmaceuticals VRX. When they all sell out of a stock, it moves the entire market. Right? So if we hold that belief to be true, why would I trade anything else? Why would I rely on news? I want to follow their flow. So if I can follow their flow, I can just trade the options on those stocks. And number 4, and importantly, high options volume. Yeah, like 70 to 4 back again. I need high options volume to trade on these stocks. It's a must to trade. I don't want to go to a stock or an exchange-traded fund and say, hey, look, you know, Dan said to do this. I'm going to go find this stock. I'm just going to buy call options. It's going to make me money. That's not how it works. Right? You need liquidity in the options market. These stocks, some of the stocks we trade, provide those for you. So let me give you a little fact of this. Right? In 2013, Warren Buffett's net profits rose 49% from derivatives trading. Right now, of course, the way he did it was a little bit differently and with billions of dollars more. Point being is, I'm trying to show you professionals at high levels of finance, right, use options a lot. Right? As a small investor, as a small trader, whether it's a speculative portfolio or an account you're trying to build, using a small amount of capital to allocate towards options trading is a very good idea, in my personal opinion. So let's keep it simple. You're going to need 3 strategies to basically work. And these are the strategies he used to kind of get to that point. So far what I've talked about is how he did it, right? He used less than $500 per trade. He traded the same 20, 25 stocks, that's it. Right? He took about 20, 23 trades a month. His average gain was about $240. His biggest loss was about $500. Right? So that's your trade plan right there. I'm giving you a trade plan to start doing this. Right. Number 3 on this is the stocks and the strategies we kind of use. Stock replacement strategy is number 1. Right. So buying calls are put in replacement of shares, a directional trade. Right. Everything he did was directionally based. What that means is if you don't understand this, ask the question. Again, feel free, open seminar on this. Right? He simply bought calls or bought puts. That's it. Nothing else. Right? So he went to the price chart and he said, okay, based on what I've learned in my technical analysis in the program, at this current point, this is a buy for me. So instead of spending, $15,000 buying Apple shares, holding it for 30 cents, and day trading it and making whatever, $300-400 and change, and being nervous and selling out and buying back in, he simply bought a call option. Right, and this is a strategy you see a lot with the day traders, or the day trading kind of thing that's hitting the markets right now. Is you risk $20,000 or $30,000, and you're nervous while you make this trade. This is why a lot of people have issues making money. They risk all this money, the stock moves 20 or 30 cents against them, and it's not that big of a move, but they cash out. Then it goes in that direction. The way you get around this is by buying the call on the stock or buying the put if you think it's going lower. Your max risk is defined. You control more for less, right? You don't have to sit there and day trade this. You can put the trade on and kind of walk away, set your targets, and kind of be done. So let me show you an example of stock replacement. So ETE long, this ticker symbol, if you want to look at it, you can actually add this to your watch list. This probably, for me, I don't like this right now, so don't go out and buy this stock. I'm just giving you an example of this. So last year in 2016, the market, if you remember, the oil markets were on the lows. Right? We had a thesis that oil would rise throughout the year. Right? And this is to go to show you we trade stocks, options. We traded it all. We just need a price chart. So what we did was this. So we went out and bought shares of this ETE, right? One of our students bought shares of ETE. So he held a core position of stock. Then he went out and bought call options in the stock as well. His call option positions made him more than the actual shares of the position did. Right? But he expressed the idea the same way. He also went out and bought USO, the US oil ETF options. Right, so he had to put out all this capital for buying ETE shares, which is fine. This particular student has the account size and the capital behind him to buy the shares. Right, you might be different, just depends. But he also bought the options to express that idea. So I really believe in this concept of saying, hey, look, I think right now, I think the market's overvalued up here. Full disclosure, I can short S&P futures, which I am now. Or I can go out and buy S&P 500 puts and hold a position in a thesis that way for less capital. I think for most retail investors who want to keep risk small and don't have a large account, this is a great strategy. So earnings trading, which we're in right now. So low risk, high reward. So stock earnings trading creates large volatile situations. Right? We typically try to develop our trade thesis 7 to 14 days before earnings. So a lot of the trades Ryan took, right, were earnings-based trades as well. And I'm going to give you some of our stock watch lists. Right? We hold about 20 to 30 stocks in our stock watch list or more options. I'll give you 4 of them right now. One of them is Priceline we trade. One of them is Apple. One of them is Netflix. And one of them is Chipotle, which I love. Too bad that would happen to the company. 4 stocks we trade quite a bit. Rick is asking me, are you suggesting to only buy calls or puts and no shares? No, I'm not suggesting that at all. What I'm suggesting is depending on whatever the trade setup is, you can buy shares and calls with it. Right, so let me rephrase this, not to confuse anybody. If you have a large portfolio, and when I say large, I'm saying over $100,000. Right, I think you should be buying shares more with a little bit of options. If you're trading with less, it's very tough to buy shares. Right, I think it's important to mix it up, and I'll go back to this to clarify this. And again, I don't want anybody to be confused. And I think this is why people, when they're trying to figure out where to put their money to invest in markets, get mixed up. You have to first ask, how much am I trading with? Do I have the time to do this full-time or part-time? right? And what's my risk? What are you willing to risk? When you answer those 3 questions, and if you need help on it, you can come to. We have free webinars at Landshark. If you go to our, I'm going to give you a free gift at the end of this. When you go to our website, actually, you can sign up now. It's a Landshark Education. Click the first link. It'll give you a free 1-hour course. We'll invite you to a webinar. We'll assess this and say, this is what our opinion is on this. This is what we believe you should be doing. But I don't think there's one strategy that's the Holy Grail strategy. It just depends on those 3 factors. Right? When I was trading a large portfolio, I didn't do a lot of directional trading. I didn't need to, right? When you have a few $1 million to mess with, it's a little different versus $2,000 to mess with. So Facebook earnings, let's talk about this trade here. 130, 135 pre-earnings. That was kind of our target. This was the estimate. The stock gap down pre-earnings. The profit was about $2,500 with puts. Right, so pre-earnings, the stock is trending higher. Right, and what this is not my trade, this is Ryan's trade, so I want to fully disclose this wasn't my personal trade. Pre-earnings, the stock was trading higher, but technically we had a sell signal saying, hey, look, I want to be short this stock. Right, and this is what he didn't do. Let me clarify this for those of you who maybe have done this. If you haven't done it, awesome. He didn't go out the day of earnings and say, hey, I think it's going lower, I'm going to buy put options on it, it's going to go lower. I've seen too much of this across the educational space from people that figure out options and don't understand how options actually work. But you can't come in the day of earnings and buy put options and think you're going to make money. That's not the strategy you use. He placed this trade about a week before. Right? The stock collapsed, right? About a $2,500 trade. But let me show you the risk, because this is important. He had one option, one option, one option, one option. That's it. Right, I think his total risk on this trade was about $800. Right, so this will help to facilitate your growth in your portfolio by also trading earnings. And again, I mean this. I mean you don't have to go out and buy 50 contracts and put your whole portfolio in this. That's not what I'm saying with this. Right, for this particular strategy, we call it Remora options, the Remora philosophy. The concept is small trades, small portfolio, and passive slow growth. So the third strategy that he used, and we still use a lot, in fact, I'm long a lot of VIX right now in my personal portfolio. We like to use a volatility strategy, right? It's a very, very simple trade. It's technically based. There's no fundamental analysis. Give me a 1 for this. How many of you have ever bought a stock based on the concept of, hey, I think it's going higher because of earnings, or I did fundamental analysis? How many of you have bought it based on technical analysis? And give me a 2 for that. I'm curious to see. And I'll show you a difference with this to why I like this product and why he likes this product. And this is, again, this is going to be one of the other products we trade along with, this VIX. And by the way, you can trade the VIX with futures. We just use options with it. So the VIX is simply, let me go back to this, is simply a volatility-based trade. Right? If you think the market's getting ready to sell off, right, I want to trade volatility on this. That's it. So we'll simply buy calls or puts on the volatility. I don't have to worry about earnings in the company. That's it. I'm simply going to buy calls or puts. That's it. And that'll be my trade. So those are a few insights to this. If there's any questions, I'm going to go to the next slides on this, talk to you a little bit about the program and offer I have for you guys today. But before I get there, any questions on this? And I wish I had more time, only about 45 minutes today. I can go to, literally, I could talk your heads off for hours on this. And in fact, I'm hoping that I can talk your heads off if you guys come and hang out with us in 2 weeks. So we have 2 offers for you today. Number 1 is, it's a package I'll talk about. If you go to bit.ly, and I'll type it in here for you, /let's trade now. You'll see the promo and I'll talk about it. Or if you want to get to know us, hang out with us, we have a free 1-hour class. If you go to Landshark Education, the first thing you're going to see is free 1 hour class on us. Just give us your email. There's no phone number. Nobody's going to blow you up to ask questions. Take the class. We'll invite you to a webinar. It's free. It's 1 hour. It'll give you information. Bit.ly, that link. Let me make sure that these guys put it up. 1 second here. Let's trade now. Yeah, let me just copy and paste it there, guys. I'll give it to you. Use that one too. That'll work too. Sorry about that. That one right there should work. That'll take you right to it. So let me tell you what this package includes. We're going to give you the More Options course. This is what Ryan took. It's 10 hours of on-demand lessons, live trade case studies. These live trades were my trades, personal trades 2 years ago. So there's actual live trades ranging from $1,000 trades all up to $10,000 trades, like real P&L. You'll see the accounts. There's case studies walking you step by step. It starts with Options 101. If you're clueless to how options work, it's a progressive course. It goes Options 101, some technical analysis, psychology, then it works into the more advanced stuff. Then we get into position sizing for $500 per trade. Right? If you've never traded with Thinkorswim, Thinkorswim is our partner. The platform is 100% free. You don't have to pay for it. We give you 45 minutes of tutorial videos on how to set up and use the trading platform. So this is number one, what you're going to get with this is our More Options course. You're going to get access to our 24/7 trading room. It's awesome, by the way. You can instant quote. There's a mobile app for this too. So if you're away from the computer, if you work, you can literally log into the chat room, type in $AAPL. It'll pull up a chart of Apple. Any questions you have, it's 24/7. We have students across the world. In fact, if I can pull it over here in a second, I'll show you the room. It's free for 30 days with this. It's normally $99 a month. You get it free only today with this package. The third gift I have for you is our Landshark trading template. You get all of our indicators. We give you a gap indicator, a level of trading grid. It's $500 normally. It's included. This only will work, guys, for the Thinkorswim trading platform. That's it. We use Thinkorswim because we have discounted trading commissions, by the way. I'll talk about that later. It goes to the Thinkorswim platform. And finally, on February 11th, we're going to have a 3-hour boot camp. I'm going to promise you this. I told you earlier about one of our crazier stories of last year, our student that took $18,000. He was a huge hit on Reddit, by the way, $236,000 in 20 days. During the market of Brexit, I'll be co-hosting this. It'll be a weekly options trading boot camp. This is live. Yes, it will be recorded. We will send it out to you. Right after this boot camp is done, we're recording this. This is going to be sold for $1,000. We've already talked about it. It'll be a 3-hour boot camp. He's going to talk about using weekly options, trading volatility, and he's going to use how he took the method I personally taught him and adjusted it. He's going to go over how he made that $120,000. He's going to show you the account in those 20 days and talk about the trades that he made. This is included with the promotion today. So the package is this. There's one more gift for this. I'm going to include 1 month access to our gold membership. It's our live trading room Monday through Friday. So the live trading room is one of the coolest things we've just launched. In the morning from 9 a.m. to about 11. We have one instructor trading. We have another instructor who trades options coming in. We have myself. I'll be trading the crude oil pit close, and in the afternoon we trade the close. So you get a mix of stocks, options, futures, all day long in the trade room. It's live. Normally it's $197 a month. So this is probably the best I think we've ever put out. I'm only doing this for the investor inspiration. It's $497. That's it. It's not a lot of money. That's the promotion we're putting out today. If you want to sign up for this, you can go to Let's Trade Now or the link I just posted, bit.ly. And it's funny that link, because I just tested. I wonder why it's not working on the other side. If that doesn't work, I put the link in there, or you can call the office. It's 855-800-1875, or visit our website. It should take it there. If I can answer some questions for you, I have a few more minutes left, probably about 2 minutes left. I can answer them. Let me show you the chat room real quick. So our chat room is pretty cool. We have a few different ones. We have our main chat room. This is what you'll get access to. right? We have upgrades, downgrades. You can look at charts. We have our Shark Lounge here, kind of cool. We were chatting this morning before class. This is an after-hours chat room. Futures trading room, technical support chat. It's a really, really great platform. In fact, let me show you how cool this is. If I type in Apple, I can actually pull up a full quote on this. Check this out. I'll pull up a chart, tweets, news about it. It's basically a trading platform on your phone when you're on the road. So one of the coolest things I've seen, you can post charts on this, right? You can also post messages. So you have questions on charts, you can talk about them here. It's one of the most sophisticated things we've put together. I think it's awesome. You get access to that for 30 days as well with this. Oh, sorry. Thanks, Renee. Yeah, so I accidentally put that wrongly. It's bit.ly. Let's trade now. And that should take you to it. Or that link I just put there for you. So if you sign up, this is only good till today. We're taking this page off tonight. I'll probably have it taken off by, I'll probably keep it till 9 or 10. Then I'll have our tech guy take this down. But this will be good to this evening. It's classes on the 11th. You can access our more options course instantly. There's no delay on that. So like I said, about 2 minutes left to take questions. I know it's rushed. I try to get through as much as I could through this in the 45 minutes. If you want the free course, if this is not enough for you, head to the website. There's literally a 1-hour free course. Take it anyway. It'll talk about the basics of trading to go into some more detail. So bit.ly, yeah, too fast, sorry. Let's trade now. Yeah, I'm just trying to rush this because we have very, very little time on this, guys. So, any other questions I can answer for you? I appreciate everybody having me out today. Hopefully you learned a little bit. Head over to the website, follow us. The free course is there for you as well. So, any more questions? Let me see, I think I have one more here. Minimum deposit for trading, I would not suggest less than $2,000. $1,000 won't cut it. I'm just trying to be as candid as I can be with you guys. The $2,000, because here's the issue with, if you put $1,000 in, your max risk per trade is going to be about 100. It's too tough to make any real money that way. I just have to be honest with you guys. It's just too tough. You need about 2,000. If you have about 5,000 or more, that's kind of suggested, but you can get away with 2. Yeah, so let me go back to the slide 1 sec. Sorry, I won't go to this. Yeah, you get the More Options course, which is 10+ hours of videos with live trade case studies. It's not simulated, it's real. You get our indicator package. You get access to our Shark chat room. You get access to the 3-hour live boot camp in 2 weeks. And you get access to the live screen share trading room for 1 month. It's $497. So literally you're getting all of this. If you bought the course by yourself, it's $1,000. Right, no question about it. And you get the boot camp in 2 weeks, which one of our students is giving who made all that money last summer. Can you have access to the recording? You'd have to ask Renee. I think they're going to be sending this out. Are all the strategies discussed in any of the courses? Yeah, 100%. There's no, this is it. There's no, in the Remora Options course, there's actual case studies. So the course that Ryan went through to start was Remora Options. Right, so if you've ever taken a course before, they give you like just information, like basic, but there's no application. Right, we actually took case studies of past trades, literally the same strategy, and said, hey, okay, here's price line, this was the entry, this is how we did this, and then we walk through it. So you actually have case study. If that doesn't benefit you, right, you have the 3-hour live boot camp. If that doesn't benefit you, you have 1 month access to a live trader room. This is real. You can see people placing trades. It's options, futures, stocks, it's everything. You have 1 month access to that. Does not allow you to ship Lewis. Do me a favor, Louis, because it won't ship to that. There's a code on outside of the United States. Email. Let me give you an email to email this. Phil at Landshark Education. He's our enrollment counselor. If anybody is outside the United States, it won't let you purchase because of shipping error. Email Phil. He'll get that right out to you, or just email the site. This will expire today, by the way. I'm taking this down by today. That's it. So if you guys have questions, you need to get signed up, you can call the office. Somebody can help you at the office. The office number is right here, 855-800-1875. The website, it's all there for you as well.